Hi, I'm Chris Hill here with Austin Smith. We're talking real estate. The Case-Shiller Index coming out, home values up 12%. As a homeowner, I love this. I'm thrilled.
Yeah, and who doesn't? I certainly was happy to see the number myself. The problem is that there's a lot of different indexes out there, and 12% definitely seems to be on the upper end of how much home values actually rose. So Case-Shiller says 12.2, Zillow says 5.8, and the FHFA, which is the Federal Housing Finance Agency, says 7.3%. And the difference really comes down to the methodologies. And of course, whichever index you look at is going to have different, overweightings or underweightings, and it's going to indicate that the housing recovery is either further along or not as far along, depending which index you look at. So Case-Shiller says we're still 25% below highs, while Zillow says we're about 17%. Again, it's all going to come down to the differing methodologies, and I actually think Case-Shiller isn't the best one to look at here because they only look at the top 20 metro areas, and this is only single-family homes. It doesn't include condos, it doesn't include multifamilies, it doesn't include a lot of other different property types out there. So while it's undeniable that home prices have gone up, I think 12.2%, I wouldn't anchor on that too heavily here.
Investors have a bunch of different ways that they can play the housing market. Obviously, there's pure play, Toll Brothers, D.R. Horton, that sort of thing. Something off to the side like a Home Depot, a Lowe's, that sort of thing. When you look at this data, what do you think the takeaway is for investors?
Well, I kind of see two takeaways. One, from the homeowner perspective, the individual home you buy has never historically been a great investment. So don't sort of see these rising home prices and go in and rush out and buy a bunch of homes. If you're a homeowner, buy a home when you need one. If you're an investor looking to maybe play some equities, I think Caesarstone and Tile Shop Holdings are two of my kind of favorite stocks for a housing recovery. There's a lot of data out there that suggests that people are renovating their homes, and you typically renovate before you sell. And I think Caesarstone's and Tile Shop Holdings are two really great companies for that sort of renovation boom that a lot of people have projected, including Zillow.
When we talk about investor psychology, it's one of those phenomenons that it just is the way it is, that even in good times when the stock market is going up, investors get scared, they start to panic a little bit. We see that in the housing market as well. What is your take on that?
Yeah, so we're seeing a little bit of irrationality in the housing market right now. And I'm looking at a Trulia survey recently, which polled prospective home buyers. And the top two concerns among home buyers are rising interest rates. We saw that big spike from below 4% up to 4.5%, really scary. And the next biggest worry is rising prices. They worry that with rising rates and rising prices, they're going to get priced out of the market too quickly. This is completely ridiculous, and people need to take a step back. They're looking at this with a 6-month view, right? 4.5%. Can you imagine telling someone in the late 90s you're going to get a 4.5% 30-year mortgage? It's ridiculous. We're talking about a 30-year commitment here, and people are only looking at this with a couple-month mindset. You'd imagine they'd take a longer view. 4.5% is incredibly cheap, and no matter which housing index you look at, we're still maybe 15 to 30% below the peak housing prices in 2007, and that's going to vary by index and market. But the reality is, it's still a cheap time to buy a home, both on the financing end and the price end. So I think investors are being a little irrational here. The biggest worry they should have is that they're going to make a rash decision going out to buy a 30-year mortgage on a home because they're too worried about losing that home and maybe overbidding it or buying the wrong home. So home buyers a little irrational here. Take a step back.
Relax, everybody.
Right. This is a 30-year commitment you're making. Take some time with it and realize that 4.5% is still very cheap.
When we look at housing, it is natural to look at some point to California,
right?
Because there's a lot of data that suggests what's happening in California just spreads eastward. When you look at California, what stands out to you in terms of sort of the whole notion of a housing market that for a lot of the country is still looking, to your the point you just made, still looking kind of cheap?
Yeah, one of the interesting things about California is how this huge economy can boom, bust, and still be as expensive as it is.
Yeah.
So Realtor.com recently listed the 5 most overvalued cities, and 4 of them were cities in California. So it includes San Diego, LA, San Francisco, and San Jose, and all of them are up in price at least 40% over the last 15 years, and that's inflation adjusted, and some of them are actually 50% more expensive. So relatively, these Californian cities look very expensive, but it's hard to say necessarily that all of California is in a bubble just based on these few cities. What you really have to look at is the nuances of those markets. So when looking at that, I think the price to rent ratio is going to provide a lot more clarity. So when you look at that, San Francisco and San Jose are the most expensive at a 30 times price to rent ratio. San Diego is at 20x, and Los Angeles is actually a little bit more reasonable at 15 times. So you see kind of a, although they're all expensive, they may not necessarily be too expensive when looking at it on that ratio. So California still has some surprisingly expensive pockets. San Francisco seems like one of those crazy bubbles that will always be expensive, like New York. But it's hard to paint a really wide stroke with that and say that all of California is now suddenly overvalued because there's these suddenly expensive markets. Taken in aggregate, the housing market is still pretty cheap. California's got some expensive parts. They probably always will because they're California, and who doesn't love living there? But ultimately, California's a big state, probably not in a bubble just because you got these expensive cities.
All right, for Austin Smith, I'm Chris Hill. That's all for this week. We'll see you next week.